Hi and welcome to the Weekly Markets Update. It is Tuesday the 7th of May 2013. Okay, so in terms of data that we've seen this week, yesterday morning we saw China PMI services reading coming in weaker than expected there. We also saw the manufacturing reading coming in weaker than expected last week, so really seeing the toll being taken on the Chinese from the problems we've got particularly out in Europe at the moment. Also yesterday we saw European flash PMI readings. These came in pretty much in line with expectations, some slightly better, some slightly weaker. However, overall, I think the most important thing to note is that they're all still in that contractionary zone or lying below that 50 mark, which is the all-important reading to see exactly when we're going to pull through. Also out of Europe yesterday, we saw a sentiment survey, again, weaker than expected, so not looking that good for Europe, as well as retail sales, down 0.1%, in line with expectation, but obviously still weak data. I think, though, the focus for the market still this week has been the data and figures that we saw at the end of last week from non-farm numbers and also from the ECB. We saw the ECB on Thursday. They cut their rates by 0.25%, making them 0.5%. The market reaction to this initially wasn't too dramatic. People had been calling for the rate cut, predicting it. I think it was largely priced into the markets. What did have quite an effect was the press conference following, when Draghi was asked questions. He was asked about the possibility of negative rates, and it turned out that he said the ECB are actually largely open to negative rates, open to those discussions, and also that he thinks that they're technically ready. So now there's a lot of talk around this. We've had quite a few politicians coming out after this, talking about it when there's chance of it, not chances of it. But we've seen Draghi reiterate his point yesterday. Also, as I said, end of last week we had the non-farm numbers out of the US. These came in stronger than expected at 165,000. The expectation was for 145,000. So, a bit of positivity for the markets there, and also the revision from the prior month was revised up to 114,000 from 88. Initially, obviously, these numbers look very positive, but when we actually look in behind the numbers, it seems that the focus was relatively narrow for the increase that we saw this month, mainly in the services sector, in tourism, and also in terms of earnings, the data not quite as positive as we may have initially thought. However, so we're still seeing a reaction from this data into this week. We had the holiday in London yesterday and also a 4-day holiday from Japan. So they're coming in this morning, reacting on the back of the stronger data. We're seeing new highs in the Nikkei. Also saw some highs. We've seen lots of stocks hitting new highs. The Dow last week made a new record high. So currently trading the FTSE around the 65.44 mark, Dow around 14,930. We've got Eurodollar sitting at 1.3108, cable around 155.24. The gold future currently trades 14.61, and the Brent future at 105.1. Okay, so that sort of leaves us today. We haven't had too much data out this morning. We did see the Bank of Australia cut their rates to a record low of 2.75%. We also saw French industrial production out this morning, came in weaker than expected. However, then we had German factory orders actually coming in stronger than expected at 2.2% when they were actually expected negative. Into tomorrow we see German industrial production, so all these figures being quite closely monitored, the German and French industrial production looking ahead to the Q1 GDP reading that we'll get for Europe next week. So watching these figures to try and work out an estimate of exactly where this might be going. So as I say, that's all quite quiet for today, and tomorrow we've got that industrial production reading in the morning, and then the afternoon US mortgage applications, so another relatively quiet day. Thursday is probably the busiest day of the week for data. From the UK we've got industrial production and manufacturing production, so it's theme throughout the week. We've also got the NIESR GDP estimate on the back of that positive 0.3 one that we saw recently, so interesting to see if that comes in line, still stays positive and as high. But the main event is probably the Bank of England releasing their rate decision and also the asset purchases decision. Largely expected to keep both of these on hold, keep rates the same, and also keep asset purchases as they are, and the vote expected to stay the same, although we won't see that until we see the minutes next week. Because of this positive, the 0.3% GDP that we saw, which was stronger than quite a few estimates. That's why we're expecting the bank to remain on hold in terms of action, probably waiting for Carney to come in July for anything, to alter there. In terms of other data on Thursday, we've got the US initial jobless and continuing claims. This data was better than expected last week, so interesting to see how that plays out, especially on the back of the stronger non-farm number that we saw Friday. And then into this Friday, we've got German trade balance data, got their imports, exports, and also current account. We get the Italian industrial production on the back of the other European readings that we've seen this week. And from the UK, we get the trade balance and construction output. So I think things to watch out for, it's mainly the Bank of England and their decision. The decision's coming out Thursday, and also we're also watching out for politicians on the back of the ECB press conference and the rate cut last week. Keep an eye out for any sound bites from the likes of the ECB officials and Draghi, just to see if they're giving you any hints of what may be to come and how serious they are about these negative rates. Okay, as usual, any feedback, please get in touch. Thanks very much.